What is up, ladies and gentlemen? How you guys doing? I am doing absolutely lovely, and I know y'all have been waiting for this weekly analysis, so let's just get straight into the video. As you can see, we still have our setup from the previous videos on the larger time frame. Our lines are still just intact. The highest point that Nasdaq actually went to, highest high that we have now on Nasdaq, is this zone here at 18032.4, and you can see that we have a new point. So it's pretty interesting. We want to see what we'll be looking for this week, but let's just go make a run through from the trades from last week, right? So last week, what was I even saying? Where was the market? I think the market was somewhere here, right? And then we were like, yeah, the market might push to this trend line, or it might go back to this trend line here and then start buying from this zone. If you check the video from last week, you can actually see that that is exactly what we're looking for. And let me tell you one thing, I was biased on Monday, you know. On Monday I was so biased. Okay, let me just start by removing these lines so that we're not confused, right? Let me just remove these lines. We want to leave our trend lines intact because there's nothing to change there. The market is just, you know, acting according to how it should, respecting those trend lines and stuff like that. But we want to remove the horizontal raise and go on our 30 minutes time frame, right? So we want to just run through our trades from the previous week. We have our trade on Monday. So on Monday I was like, yes, this was where the market was. We opened, yeah, somewhere here. This is how it closed on Friday, right? So Monday we opened our New York, our Asian session closed, and then we had our New York open right over there. And then when I saw this momentum, right, I was like, oops, the market is coming in strong and is going to buy. And then I entered my buys and I had my stop loss on this institutional candle there, and then I was cooked nicely. But then that is normal. Why? Because you don't trade on Monday with with large stop losses. You don't want to trade on Monday with large stop losses because you're going to get taken out nicely. Mondays are normally trap days, so you always want to be careful on Monday. But then I was like, nah, let me just take the risk, and I did add a little bit of entries, nothing too crazy. And then the market was just forming its highest high, and then it didn't push further because at this point I did not know where to put my stop loss. As you can see from my entry point, the market actually moved in my direction, and this is a 30-minute time frame. These are good pips, right? But if I had closed, I could come and sit here and lie to you guys that I closed, you know, and then I just made all that money. If you go on 5 minutes, a lot of people like to trade 5 minutes. If you go on 5 minutes, this is a lot of money, this is a lot of pips. But then I did not close. I was like, nah, maybe it might just push to this zone. I didn't put my stop loss in entry. I didn't do nothing. I just waited, entered my trades, left it to run through, and then it then hit my stop loss. So that was Monday for me. And then Tuesday, I was like, okay, since it has already formed its highest high and it has already all that momentum there, and I think, when was CPI? I think this was CPI, right? Yeah, this was CPI. I'm not so sure. Wait, let me see. When was CPI? Yes, that was CPI. And then, oh gosh, this was a lovely trade. So you obviously know that if I'm excited like this, we actually took a sell, right? So we spoke about this liquidity zone that it was creating. This was on the previous video, right? We spoke about it here, and then if you look at it nicely, it was on the retest of the highest high on a higher time frame that it had there. So a lot of people could have been biased here that the market is just coming to retest the highest high and then push up. But then remember that we had our trend line at the bottom that we were actually just eyeing, right? The market wanted to go and play around that zone. Okay, let me just make it a little bit clearer. So as you can see here, a lot of people that like to trade break and retest, they were like, nah, it broke that time and then now it's coming to retest at this zone and then buy. But then you can't forget this trend line that we had at the bottom there. So we actually knew that the market wants to go and play around at that trend line, and obviously I didn't think it was going to tap and just go up at the top like that. So that was how we ended up with a lovely sell on Tuesday. I did send a signal. Obviously we took the CPI trade. Where did we take it? I think we took it right, I think it was, yeah, I had the post on Instagram. I think it was a couple of minutes before CPI, but then it actually just dropped. It was lovely. It was lovely. I think I closed it around about this zone because it was news, so we did have a tight stop loss. So I closed it around about this zone. As soon as it touched the trend line, I didn't want it to go and break because I was not expecting a break. I wasn't expecting the market to break down and then go. Nah. I was thinking that it would just sit on the trend line, play around, and then buy. But then that was enough for us for CPI. And then now when we were now sitting here, right, the market then came to the zone, and as you can see on our 4-hour time frame, it came with this candlestick right here, bearish candlestick, and then it sat here. So we're now waiting for either a break or a rejection at this zone. So it played around and then it did give a break, which then formed this new liquidity zone that it has at this point here. So it had touched 1, 2, 3, and then it came, broke out, and then touched for the fourth time, I think, and then rejected. So I then marked up this zone. That's why you saw those lines when I opened the video at first, right? So I'm now eyeing, this is now us going into the analysis for this week, right? We're eyeing this zone. It might be a liquidity zone right there. And then this was what? This was Tuesday, right? So we were now waiting for Wednesday, and then we saw that there's a rejection right here. So we're then obviously going to look for buys, but then we were only going to trade after we see momentum on the New York Stock Exchange open. You know, that New York session open market thing, you want to trade it when there is a lot of momentum, right? So we obviously waited, and then at first it was kind of tricky because it did come off with this bearish engulfing candle, but then we were obviously inclined to buys, and we did buy, and then it had a little bit of drawdown, which wasn't, you know, ideal. You don't want to be sitting in drawdown, let me tell you. And then it was like this. So I had a really crazy stop loss, but then obviously when I gave a signal, it wasn't something like out of the ordinary, right? I think it was below the Asian low, somewhere there. And then mine was like really crazy. You know, I was watching the trade, I didn't even have a stop loss, so that was what was up. So we had a buy on the zone, and then Wednesday our buy was actually a large. It had a large take profit, so we didn't leave the trade on Wednesday. So we carried our trade into Thursday because we knew that it was actually just in a buying. It hit the zone, it got rejected, so that is buying, you know, signal. So we entered the trade, we held our first take profit is always 40 pips, our second take profit is always 100 pips. So you always know that every day we have our first and second take profits hits, and then you're always going to put your stop loss in entry and then hold till the third take profit, right? So we were holding this, and then we were going to wait for this zone here to enter another trade because that's when we have momentum in the market. But then there wasn't really that much momentum. The market wasn't so crazy on this week. In fact, I could say this week it wasn't so crazy. So when we saw this, and then it was, you know, nothing too crazy, then we just had to just leave the trade because it seemed to us that the market is actually trying to break or trying to go up, but then the buyers are failing to keep pushing the market higher. And as you can see, after all these days, it could have moved with a lot of momentum if it wanted to go to the top. So this is why we ended up leaving our buying setups before they hit our third take profit. And then we were now waiting for Friday. And then Friday, I always want to catch really big moves, but then the market was acting up. Let me tell you, it was acting up. And as you can see here, the New York opened at this zone, right? But it opened with so much selling momentum such that I went and I entered. I failed to catch this move, this really big move. I failed to catch it. And then if you notice, it was already late, right? So I had to wait for a retracement. And then I entered around about this zone, a sell. I entered a sell around about that zone, and then obviously you know that our stop loss was somewhere around here in the middle. The way it started, you see this candlestick where it started. But if you go on lower time frames, it actually makes sense. Yeah, you see we had an institutional candlestick there, so we knew that the market was going to, you know, come around and play at that zone. And then this is how we ended up. Just catching the sell till there, and then I had to close the sell, I think, at this zone, which wasn't a little, it was just a few pips. I know, yeah, it's a lot of money still, but then I was targeting this zone. So this is what we closed the trade at this was like almost, yeah, I closed at 11:45 because I didn't want to hold over the weekend. You know that you just hold over the weekend and wake up and then there's a really big gap on these markets, you will cry. Okay, so this is what is up for. That was what was up with our trades for last week. And then right now, let's just jump into the analysis for next week. What we're looking for, nothing out of the ordinary. As you can see, we already have a break at that zone. You already see that we have a break at this zone here. The market broke this zone, so this trend line, this line here, horizontal ray, is already invalid. So what are we looking for? We can see a break, right? If it breaks and closes at this zone, we're looking for it to come and sweep out this liquidity zone that we have here. So we might be targeting around about this zone here after it sweeps this liquidity and goes down to that zone. But if it does not break and close and it rejects at this zone, we are going to be targeting it. You want to now buy after it crosses that zone there, because it showed you that it's not going to go down, and then you will be targeting it to break first this zone, and then if it then breaks this zone, you already know what to do. You're going to be adding entries still about that zone. That's about it, guys. Nothing too crazy, nothing too complicated. You don't have to complicate anything on these charts. But if you enjoyed the video, make sure you smash the like button, turn your post notifications, and subscribe to the channel. You feel me? With that, it's Vincino, and I'm out. Peace.